Hey everyone, welcome to a new video here at Sublime Traders. I'm Logical Orange and today I am looking at a bloody day that has begun with the Doji Star candle. So a candle that has long wicks and a very small body. This is indecision and this can lead to two things. One is the positive side of things. We can start ranging and then we will see. But in order to know or think that we will start ranging, we will need at least another candle. Another candle that will engulf this small body, which will not be that difficult. And this can possibly confirm that we will be ranging for a while right here. And why this area right here, you would ask? Well, I'm going to take you back in time and I will show you why this area is a possible range area. And this is the place right here. So it happened between 17th December 2020 and the 25th of December 2020. So it lasted about 8 days, and this was a range that has been formed before continuing to the upside. At this point in time, Bitcoin was bullish and it was exploding. It had only good news. People were in vacation and they were looking at crypto as a possible investment tool, and they were right. This area right here at the time was considered as accumulation before continuation. Now let's go back in the present and check the same range. The possibilities are indeed here. So we have the first possibility that we will range in this area right here with a low of 21,798 and a high of 24,337. This is roughly about 11%. But what happens if we fail to hold the range? Well, as I posted yesterday and the days before, we are in bearish territory, and on the fundamental side we are suffering, and we are suffering again because of the US and the influence that the US dollar has on the markets around the world. So we had the CPI report on Friday that started the sell-off and that led to this drop right here. The sell-off happened all over the markets, so the stock markets also suffered. From the all-time high, Bitcoin is now almost 70% down. If we look at the chart, we had the high from here to here. We are almost 70% down. So this is very bad for a lot of mid-term traders, let's say, because long-term traders, they don't really care about the dip. They have their assets and they live through this. This is just a cycle, remember. We will eventually go back. But in order to do that, we will need to find the bottom first. And as I said, we have one possibility. This is that we will range in this area. And the second possibility is that we will retest the 20K area once more. And this area right here is filled with buy orders. These buy orders are limit orders, and these cannot move the market in a direction, but they can stop it. So limit orders in general, they stop a trend. Market orders move the market further. So in order to go higher, we will need to have market orders. But in order to have the people placing market orders, we will need to stop the move. Well, with this candle, we stopped it, but it is really weak. This candle is really weak. We have a spread of 11% on the candle, which is not that big, given that we just had a drop of 33%. So we had like 30% of the initial move as a retrace. It's kind of weak. If we want to see a big retrace, we will need to see like a 50% retrace, like a 50% candle that has a spread of, 50% of the initial move. This would be a strong rebound And this can mean that we can go further up and we found the bottom. For now, we didn't. And this is pretty much worrying because we can still go to the 20K level. And the 20K level, I will show the orders on the 20K level. So right here, you can see we have a cluster of orders, the 20K level. And this is basically the wall that is keeping us from the teens. If we go if we go below 20K level, we can go certainly lower, and I will explain why in just a second. For now, let's just take a look at the order blocks that are formed right here. We have 22.5 right now. This is where we are basically right now. This is here. We have like a good amount of buy orders, but these are too close to the actual price right now and they can disappear. And if we go back and if we go down on the order book, we can see that we have bigger walls, buy walls at around 21K, 2150, and the biggest ones are basically 20.5, 20.100, and the 20K. So 20K is really the biggest block that we have right here, and this is meant to stop the market from going down further. Now, this, I repeat, doesn't mean that the market will go up. Limit orders only stop a market from going down in this situation through absorption. So, as you guys know, we have supply and demand, and through demand, we are just absorbing the supply, the excess supply. Why do we have so much supply cells right now? Well, this is because of multiple reasons. I will only take one right now. This is the fear of USDT depegging right now. People are selling USDT for either buying Bitcoin, but this is not happening right now, but they are selling USDT to USD because USD, believe it or not, is safer right now. And also people are selling BTC to USD. So money is really going out of the market. So this is the main fear right now. This is why the markets and consumer price index influences the markets at this level. Of course, we have other fundamental issues as well on our plate. This is not all, but let's just keep focused on what's happening right now, because I think, in my opinion, USDT depegging will really hurt the crypto market in the short term. Let's hope this doesn't happen. Now, what can happen at 20K? Well, at 20K, between 20 and 90K, we have MicroStrategy that will start having issues with their positions in this area right here. I'm just gonna highlight it. This area right here, MicroStrategy starting to have issues. And in order to reduce their losses, they will need to sell. And if they start selling, well, let's say the price goes right here. If they start selling, it will trigger a cascade of stop losses that will push the price lower and lower and lower and lower until about this area right here, so 12K. And I talked about this like 1 month ago. This is a real possibility that Bitcoin can go back to this level, and even it can go even lower. So right now I cannot project that much, but I suspect that if MicroStrategy starts selling right here, it will start a cascading loss spree, basically, right here. And we have Celsius at around 16K that will get liquidated, so another wave of sells, and we go all the way back to 12K. Now, this is very bearish, and I'm not the bearer of good news today. However, let's hope for now that 20K will hold, because this is really, 20K right now is really the last bastion that we have. This is the call to arms to all traders. You can protect this level. You should protect this level, because if we go lower, well, we go all the way down to possibly 12K, and this means further losses. Now, when will we go up? It is too soon to say. We don't have anything that is saying that cryptos are bullish. Nothing at all. Everything is bearish. 70% drop until now. And if we go all the way back to 12K, it can mean we hit an 85% drop. Very, very bad for all the investors. However, what you can do right now is to plan your DCA strategies. As I said yesterday and the days before, DCAing is one of the best ways to invest in crypto mid to long term, because you can be wrong with your entries, but eventually you will have an average entry that is pretty decent. So for example, if we take what we can see and what we can foresee in this near future, we can have multiple DCA entries in this box, maybe 1 or 2, and then place some other entries just above the 20.5K, where we saw that we have a pretty good order book. And then of course we can shoot some shots in the dark with some orders at 70K. And well, of course, we can trace a Fibonacci in order to try to predict possible levels that might be hit in the futures if the price goes down. This is just a broad Fibonacci that I traced quickly, but we can be more precise. So yeah, basically we just need to DCA in, guys, because this is, believe it or not, a very, very good investment opportunity in crypto. Crypto is not going to disappear, but this is a very, very good entry time to entry. So let's say I don't have a precise entry point for DCAing in, but this is a very good time to buy, because don't forget, we will have further halvings, we'll have improvements on Ethereum, so on and so forth. Crypto is going to be in demand in the future. It is not going to disappear. So you might as well accumulate as much as possible at lower prices. And the cycle will continue. When the issues with inflation will be fixed, it will last a bit. I think we might see some really good green candles in September. But until now, it will be undecisive and we will be range bound a lot. But yeah, as I said, DCA in, guys, and for shorter time frames, scalps, just follow the scalping channel, our futures trades, and of course, our strategy recommendations. So this is all for today, guys. Thank you for watching. This is Logical Orange, and see you in the next video.